Welcome back, superstars. We are talking about how to finance growth for your company, for your small business with debt. So right now, this is video 3 that we've been doing. We've been doing in this series with Keith Kohler. Keith is the founder of Financing Man, K2 Financing. He's a specialist with helping companies use financing to grow. And so what we're going to talk about now is how do you qualify for a small business loan? How do you get ready to get financing?
Yeah, it's a big topic. And really, the most important things are that when applying for a small business loan, they're going to look at 2 things.
Okay.
They're going to look at you, and they're going to look at your business. All right? And a lot of times, I find with my clients is they forget the you part.
Okay.
And the you part takes a lot more preparation often than the business does,
Okay.
ironically, right?
Okay.
And what do I mean by you? What I mean by you is, first of all, your credit score.
Okay.
So have you checked in with where your credit score is currently? Now, you can go to the bureaus, Equifax, TransUnion, or Experian, and they'll provide you a free credit report once a year, and that's one source. If that's not a place for you to go, you could also look at Credit Karma, Credit Sesame, any of those online ones. They'll give you an approximate indicative score.
Okay.
The important thing is not just the score, but the detail behind it, right? And checking in there, you have to see, is it accurate? Because oftentimes a credit report can be inaccurate.
I just found this out the other day. I had a whole credit thing with Nordstrom that wasn't me.
It can happen because Social Security numbers can get mixed up if they've ever had, God forbid, any issue with the dark web, getting a hold of your numbers. All those different types of things can show up. It's also frequently an issue when you have common names,
Okay.
like Jose Velasquez, right? For
Michelle
example.
Villalobos? I don't know.
Well, maybe not too common, right? So that could be a rarity, but mistakes can happen, right?
Yeah,
And I'm glad
it
that you
did.
caught it because it's really critical to clear those issues up.
Yeah.
Another thing is, the important part about credit is time heals all wounds. It really does. It's a refrain we know from other parts of our lives, but it's really a key. So if you have late payments or major issues within the last 12 months, that's what you really want to focus your attention
Okay.
on because you're going to need to provide a letter of explanation as to why that happened.
Okay.
Yeah, and some issues on credit are more difficult than others.
Okay.
For example, missing a mortgage payment is considered a high problem.
Okay.
Because who would miss that, right?
Right.
If you missed a medical bill because it got lost in the insurance and this and the payment and back and forth, that's a lot more forgiving.
Okay.
So it really depends. But the key thing is check in with your credit score, understand not just the score, but the details behind it.
Okay.
Because that's going to be a big component about whether you're qualified or not.
Okay.
What's a good score? Typically 650 or so and above.
Okay.
A smaller credit score or a lower credit score can be okay if the rest of the file is strong.
Okay.
And a super high credit score, always above 720, bam, you're always going to get what you want. All right?
Really?
Yeah.
Oh, good
So
to
check in,
know.
please, with your credit. One thing we can talk about later in more detail, but I really want you to check in with your mindset. Yeah. Are you feeling abundant right now? Are you feeling positive about your business?
Right.
Part of you getting a loan is your showmanship.
Yes.
How you show up, are you showing up positively? Are you ready to have an underwriting call where, hey, I'm excited about where my business is going.
Right.
There's all this opportunity versus, oh, I'm not sure, and
Right.
and it might be a hard year next year. And,
Right.
and for any of those reasons, you could get caught and mired in that scarcity mindset. And if you're there, it's going to show up,
Okay.
whether verbally on a call or whether in the materials that you present. So
Okay.
check in with yourself. You want to really be in that abundant mindset and be sure of, hey, I'm
You're
stepping
going to
into
show
something.
up as someone who's very optimistic
right.
about the future.
Yeah, because lenders are attracted to people who are confident,
Yeah.
who present themselves well. And if you know that that's troublesome for you, work with someone like me who can show you how to show up best
Right.
and most effectively.
Yeah, and keep in mind that at the end of the day, it's not just on paper.
No, it's not at all.
Humans are making these decisions.
That's exactly it. Right. Now, there's a whole fintech world out there.
Right.
Where it's kind of like, I call it sometimes push button financing, where
Right. Well, like when you call up for a credit card or
That's
something
right,
and
yeah.
they just like approved on
It's
the
an
phone.
algorithm, right?
That's different.
That's
but small business financing alone is a different
Absolutely.
beast.
It has a relationship component to it. It's not just crunching the numbers. It's about, do you have a relatability to that business development officer?
Okay.
Is there a way to make some type of connection with her or him? Hey, we went to the same school, or my brother did this, you do that. Establishing that type of rapport makes them want to get it done for you.
Well, and so let's speak about who are we going to here? Where do you go? Is that part of this getting ready to apply? You got to, like, where are you reaching out? Are you calling your bank? Are you, going online and Googling small business financing?
Yeah, it really depends on what you're using the money for and where you are in your stage of development. So let's, for our purposes, assume that Michelle's book company is profitable.
Yeah, it's in its second or third year or something like that.
Right, and that you're going to your bank where you currently have your deposits.
Okay.
That's normally going to be your first stop when you have multi-year profitability or you have a long-standing relationship with that particular bank, right?
Okay.
So that's your first stop. It's where you're going to get the best deal because they know you.
Okay.
They can see all your deposit history, the way you've interacted with them,
Yeah.
and probably you've established some level of relationship with both your branch manager and your business development officer, right?
Okay, and if you haven't, maybe that's a good place
That's
to
a
start.
key thing, absolutely. Because business development officers should be there to say yes.
Okay.
However, they have the credit department, which is managing risk. I often call them Dr. No.
Okay.
Right? You don't want to get too many Dr. No's, but they balance each other out.
Right.
They
So
all
you go
have
to
their
your
purpose.
people, your managers, the people that are wanting more business,
Right.
so that it can mitigate the people that are like
Yeah.
the ones that say no.
They're incentivized. They're incentivized to get credit out there and to get loans out in the marketplace, right?
good to
It's in
know.
their best interests.
Okay.
So they should be cheering for you.
Okay.
Help them cheer for you.
Okay. Make
So
it
show
easy.
up, show up in the best
All
way.
right. So mindset.
So the mindset, being abundant, right? Next thing, of course, is your business itself. Where is it at? Do you even know? Right now, it's November 2022. So the key thing that an underwriter is going to look at for a business loan is primarily your 2021 filed tax return.
Okay.
That's the
So
first.
last year.
Last year's. They're going to look at actually three.
So wait, if you know that this year is not going to be very good, but last year was great, you might want to go get a loan right away.
It's a yes and, right?
Okay. All right.
The yes and is that because of the time of the year we're in, they're going to look at 21 tax return as a principal one, and they're going to look at what you did so far in 2022, right? So here we are in November. Let's say you have your financials for Michelle's book company up to September.
Okay.
Maybe not October yet, but you have September done, right? And they'll say, okay, great. Oh my God, on a revenue basis, she's up higher, her profitability is up higher. They want to see that trend upward.
Upward.
If there's any reason, however, that it's downward for any way at all, now it could be simply because a lot of people might be buying your book for the holidays, for a gift giving season, and you might have 50% of your sales in Q4.
Right.
Right.
And that hasn't happened yet.
That hasn't
so
happened yet.
potentially you could explain that.
Absolutely.
And say, hey, watch, the next 2 months are going to be.
Yeah, and oftentimes if you've been in business for several years, they're going to look at comparative periods. They'll say, okay, here was 22 first 9 months versus the same period in 2021.
Okay.
And if 22 is higher, although it might not be all you need,
Right.
that will still get you past past the hump.
Great.
Right. So that's essentially the key thing. Where you are, your credit, mainly your credit score,
Okay.
and then your business financials. The last thing which I really want to relay to everybody looking is now more than ever, because we're going into recession, your cash position
Okay.
is critical. Your cash position, both in your business and personally, and that's called liquidity, right?
Okay.
So liquidity for our purposes, let's say your operating expenses, your typical expenses are $10,000 a month for Michelle's book company. How much cash should you have in your business? Well, when times are exceedingly good, it might be, hey, 30,000 is fine, 3 months.
Okay. 3 months.
3
so
months.
You do this
when
by
times are really,
time?
really good. Oftentimes, yeah.
By time.
Yeah.
How many months
Months
that you can
of
cover
expenses
your
you can cover based on your
Okay.
exactly that. Now that we're likely moving into more difficult times, it could be 6, it could be 9, it could be a year. It's a great question you want to be asking up front
Okay.
for whoever has a role.
Okay.
Right. What do I need to show in terms of liquidity?
Oh, okay.
The personal side is important too, right?
Okay.
So a lot of times what I often see is companies have terrific amounts of cash in their business. Their business is great.
Oh.
And it's also true that the founders continue to fund their business. They don't want to incur personal taxes. So their personal liquidity might look like, I've got 5,000, I've got 10,000. That might be enough for you and it might be
Okay.
fine. But if Michelle's book company is looking for $1 million in lending and you have 5 or 10,000 personally, that's considered really low.
Right.
Yeah, that's
Right.
considered low personal liquidity. So that could be an issue too. So it's a bit of a balance. And all of us get to make those choices of between how we manage the business finances and how we have our personal, but they work in lockstep. It's not just one or the other.
Okay.
So really in that qualification period, a lot of times people focus on the business thinking that's all I need to take care of. No, now more than ever, the personal side figures in too.
Also, Keith, how important is it to share with them what you plan to do with the money?
Absolutely, 100%. Because in any financing request, you'll say, here's my total amount. And again, let's use the amount of, say, $500,000 you're going for. They're going to ask you to break that down into bite-sized pieces.
Okay.
And say for Michelle's book company, you're going to say, okay, I'm going to spend $200,000 on inventory. I'm going to spend, maybe you have a special machine you want to buy to publish your book in a certain way, which is exotic. It might be for graphics. It could be anything. You want to buy that piece of machinery and locate it at your publisher.
What about like investing in public relations?
Absolutely.
Or being able to buy, you know how you can buy into the airport book stands.
100%. Yeah, you know, like a slotting fee or get a placement, right? Yeah. All of those are in the bucket of what's called working capital.
Okay.
So those are all those typical expenses you see on your expense items in your financial statements. That large bucket is working capital.
Okay. What can you not spend the money on that would be a red flag and they'd be like, no, we're not going to give you the money for that?
You can't really use it for personal purposes.
Of course.
But I one time saw a woman get a business loan, and she was not ethical on saying what she was going to use the money for, and she actually used it to renovate her house.
Oh my God.
Yes.
Well, did she get busted?
No.
Or no. Interesting.
No,
well,
I found it.
We're not advocating.
No, don't do that.
I
found it in her financial statements, and it was buried under some expense item.
She doesn't watch this video.
No, you're not watching. I hope, and I don't think you will be. But that's a key thing. Okay, it's like you can't use it for.
Do that.
You have to really use it for the indicated purposes.
But is there anything that you would see that they would write like, I'm going to use it for this, where the bank would be like, no, that's a terrible idea, or is it pretty much anything goes?
It's pretty much any valid business expense.
Valid.
Yeah, and it's a conversation, right? So when you look at how you're going to use those loan proceeds, what you might need to consider is banks love assets.
Oh.
Assets. They like you spending money on real estate, on equipment.
Noted.
Yeah, those are assets because those have collateral value, right?
Right.
The working capital doesn't have any collateral value, right?
So do they charge a higher interest rate when you're going after working capital versus buying an asset?
Sometimes.
Okay.
Sometimes. Based on the overall strength of the file.
Okay. Wow, I feel like I learned so much. Thank you. I could see why people get so much value out of just a brief conversation with you, Keith. This is who I send all my clients to, and so I highly recommend, highly encourage, fully endorse Keith. You can go to yourfinancingreview.com.
Yep, yourfinancingreview.com.
And you can set up a time to talk to Keith about your financing options. He'll spend some time with you looking at the 2 to 3 year roadmap for you.
Absolutely.
Right.
Can't wait to speak with you all.